Hey guys, this is George David with George David Investing. In today's video, we're going to be breaking down why Ethereum is poised to skyrocket really shortly after that big precipitous dip that just came in. And most importantly and controversially, I'm going to be talking about why I believe Ethereum still has 30x, that's right, 30x upside. And to do that specifically, I'm going to be breaking down in a way that's super simple because there's a lot of confusion around crypto and the potential and all of that, why there is such strong upside, not only for all the coins, but especially for Ethereum. So let's break it down right now. But if you haven't done so already and you love crypto, go ahead and smash that like button for me. Helps grow the channel. Okay, so let's understand what this whole hysteria, if you're new to the whole crypto craze, is. Now, cryptocurrency is a large market. Right now, currently, it has a market cap of today of $1.75 trillion. Now, let's take a look at some of the biggest markets out there. So the bond market currently does $120 trillion in value. And the checking and savings account that you might have money in just laying in a bank throughout the world does $40 trillion worth of value. Then you have the gold market, which a lot of times people compare to crypto as a store of assets in case there's inflation. That's currently at $10 trillion. And here's an interesting note for crypto is that a lot of what was supposed to be going to gold. So gold previously, back in 2008, when the market wasn't doing good, there was fears of sovereign debt crises in Europe. A lot of that money went into gold, and you saw gold prices skyrocket from 2008 all the way up to 2011. Now we're not seeing that kind of escalation in gold, and that's because that money is flowing into crypto. Now, stick around with me. This is really, really important. I want to break this down for you guys. Why that all this money I'm talking about in all of these different markets in some respect are going to be flowing into crypto and specifically Ethereum. Okay, so I'm going to break it down in just a minute, but I'm just going to summarize this really quick. And finally, the total value of all stocks out there, all the stock markets, just like we have in the United States, is $95 trillion. So when we add this all up, there's a ton of money, specifically well over $200 trillion worth of money out there. So right now, when you take a look at the bond market, which is $120 trillion, a lot of money in the bond market for the long foreseeable future will continue to earn significant negative returns. What do I mean by that? Well, right now the bond market's offering about 1% in return for about a 10-year, so 1.6% right now. Inflation currently is approximately 4.2%. And just like I mentioned in the previous videos, there's a chance that June numbers come in at 6%. So that means your money is actually eroding by 4%, even if you're earning a 1.6% return. And that's where a lot of money is situated, in bonds. Just like Ray Dalio talks about, bonds are trash. So some of that money that's in bonds is going to naturally, with upside potential, going to go to crypto because there's upside potential and it stores value a little bit more effectively, okay? If you haven't done so already, please smash that like button if you enjoy this content and consider subscribing. I try to post a video every single day of something of value, lots of value completely for free. Now let's continue going forward. So the money in checking and savings account are even worse than bonds. Why? Because if your money is just sitting in checking accounts, then you're also earning a negative return, but even more so because you're getting no return for that money. It's 0.0%. So if you have inflation of 4 or 6%, all this money that's being just printed out by the Federal Reserve, that's just eroding your money through inflation, then your purchasing power is just going down, whatever that corresponding inflation number is. So some of that money in the checking accounts are going to go to crypto. Same thing with savings accounts. Saving accounts usually mirror what bond returns do. And just like I said, checking and savings accounts throughout the world comprise of $40 trillion. So that money is going to be allocated over to crypto, and especially over-indexed cryptos that actually have functionalities and case and uses like Ethereum. So you can over-index what I'll tell you in a moment. Here's another point. Also, a lot of countries that are being absolutely smacked by the whole issue of the global pandemic, recession, lockdowns. A lot of those countries that have just skyrocketing inflation. So us in the first world, so the United States, those European countries, we might have inflation, but it's not that bad because we have a Federal Reserve. We're basically, just like in 2008, we are countries that are too big to fail. But all those other countries out there that might start going into hyperinflation, those individuals need to transfer their assets as fast as possible. Like I said, I'm reading off the market size of all of these different markets throughout the world. And a lot of those countries, like a Brazil, like an Argentina, that have had issues with inflation in the past, those individuals that are very smart and wealthy, those are going to be transferring money to crypto, especially if government starts causing regulations where you can't transfer your money overseas conventionally. Well, people will jump the boat there and put it to crypto before they're completely banned if those countries start banning stuff, just like in Russia. Then we go ahead to the gold market, $10 trillion there. A lot of that money, as we can see already, because there's a lot of systemic issues in the economy, instead of going to gold like it did in 2011, because there really wasn't such a big market for crypto, that money is going to crypto, all right? And then finally, the stock market, $95 trillion, and we love Tesla, we love our Zillows, we love our Neos, we love all of those companies, right? But in the future, especially with inflation, higher tax rates, just look at the stock market back in the 70s. If you weren't a power player, if you didn't have growth potential, not only did the stock market stay sideways, but your returns in the stock market, just like other investment vehicles, were significantly negative in return. So those different factors that are playing into this means that a lot of companies that have had massive growth and upside, it's very likely that a lot of companies and a lot of the market as a whole might stay sideways for a good amount of time. We've had history of that many times, 60s and 70s, didn't really see that much growth in the stock market as a whole. Obviously, there are some golden childs that we are aware of that will be able to override that, right? 1930s and 40s were a horrible market, especially after the crash. Things just did not really escalate up that much, but you had growth companies like Coca-Cola that still grew during that period of time. So a lot of that money in the stock market that's getting disenfranchised, worried about potential growth, that's going over to crypto. So what we just talked about there is the summation of all the markets in the world, and those are well over $200 trillion. Now, currently today, the market of all of crypto is $1.75 trillion. Now, what does this mean for the growth potential of crypto and specifically Ethereum? So I would peg this as like middle of the boat. It's not too conservative a projection, but it's also not too aggressive. But a lot of that money that is earning negative returns, not now, because we like to be long-term investors, but a little bit down the road, we can expect that the market of crypto has a significant chance to reach, and this is a big number here, $50 trillion in size. Now, $50 trillion also accounts for the inflation value of money. What do I mean by that? So $200,000 20 years ago, just a little over 20 years ago in 2000, is worth around $400,000 now. So what I'm saying here is that the value of about $25 trillion, especially with this excess inflation that's coming into the market, to, as Ray Dalio talks about, and a lot of you crypto lovers know, is supposed to try to erode the debts by, printing our ways out of it, increasing our GDP with inflation to the point that it lowers the number there. Well, that 25 trillion actually becomes about $50 trillion. You just multiply, you double it, right? That's the inflation value of money. So this gives us a multiplier of approximately 30x, which is baseline here, specifically 1.75 to 50 trillion is about 27.5x. But when you over-index, so we're taking the aggregate of the crypto market, Ethereum and a couple other vehicles I'll talk about in other videos are poised to do better than the average because they have actual uses, right? Ethereum has uses for its cryptocurrency. So there's a lot more stability and there's a lot more upside because of it. So you can over-index a crypto like Ethereum because they'll take a bigger market share of that growth potential. Okay, $50 trillion in adjusted numbers. So that means right now the market of all those monies that we talked about in all those different markets around somewhere over $200 trillion, that'll be inflation adjusted to about $400 trillion. So yeah, this is not anything too crazy. We're talking about a market 50 trillion of 400 trillion. I believe that's about like 15-20% of the whole total value of money in the world. So you guys, if you love Ethereum, 30x is your baseline right now. Buy the freaking dip, okay? I know you guys love those growth stories. And here, that's the thing that most people don't understand is, all right, most individuals, especially internationally, are just being absolutely walloped by their country's economies and their eroding dollars with inflation. They're getting their money out as fast as possible. It's not just Robinhood traders that are going into crypto. Those are real individuals out there that are seeking to preserve, right, lowest level of the hierarchy of needs, just survival. They want to survive. They want to put their money in a vehicle that goes forward, and the vehicles that actually provide value, like an Ethereum, those are going to be the vehicles that benefit out of it. So the whole entire market of crypto is poised to continue to go up in the aggregate a lot. Just the one thing that all of us need to know is those dips, and we love Tesla, and Tesla's going through a dip. But those dips that we experience in crypto, they might last a while. Remember 2017, it went up. The price of Bitcoin went up to $20,000 for a little bit. And then all of a sudden it crashes. There's going to be some very big dips. But at the same time, the market potential is huge. It's here to stay. There's a lot of functionality with it. Obviously, I'm not out here saying, oh, it's going to replace all the value of cash, all the money is going out there. But no, it's going to be a huge market and it's here to stay, you guys. So a lot of that money is being allocated and it will continue to be allocated, especially as inflation ramps up. That'll be an inflection point there. As inflation ramps up, a lot of people are going to be realizing that they can't get positive returns. In fact, their bond yields, which blows my mind. I think we almost have a bond crisis. The fact that in the past, usually bonds could keep up with the inflation rate. What I'm saying there, back in 1980, we might have inflation at about 11% and bond yields would be at 9%. So there'd be a 2% glut there. But right now we're seeing, this is horrible. Most of your money, think about this, traditional investor advice. If you're a 60-something, put 60% of your money in bonds, 40% in stocks, or 70-30, maybe to have a lower risk profile. Well, now we're having 6% inflation and our bond yields are still at 1.6 basis points. Even if it goes up to 2%, that's a 3-4% erosion just from bonds. And if you have money in your checking account, you're better off just going to the store and stocking up on stuff as those prices of goods continue to go up. No, we're not going to get hyperinflation, but I think very soon people are going to start realizing that their purchasing power is going down and they're going to seek vehicles like crypto to specifically take advantage of it. All right, you guys, so this wraps up the video in total. In short, crypto is here to stay. Buy the dip. Ethereum, in my opinion, has at least 30x upside. I'm probably going to have to change the title to 35 because I basically just talked myself into the fact that Ethereum is an over-index of the crypto market because of the utility of Ethereum, not just in terms as a vehicle of growth and storage, but of actual functionality. All right, guys, if you haven't done so already, go ahead and smash that like button, especially if you love crypto and Ethereum and you love this content. And if you haven't done so already, consider subscribing to the channel and continue to post as much value as I can in terms of anything, in terms of stocks, cryptos, anything growth related that can help you get that financial edge. All right, guys, until next time, see you tomorrow.